In this episode, we speak with Anton Katz, co-founder and CEO of Talos. Founded with Ethan Feldman in 2018, Talos provides an institutional-grade technology infrastructure that supports the full lifecycle of digital assets trading, from price discovery to execution through to settlement. The original vision of Talos was to build an intuitive system from the ground up, leveraging the latest technology and harnessing the power of blockchains to surpass what could be done in traditional markets. Before co-founding Talos, Anton was head of trading technology for AQR Capital Management. Before that, he was the director of software at Broadway Technology. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Anton, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thank you very much for having me. Really appreciate it.
So we have an audience that is primarily comprised of entrepreneurs focused on different sectors. You operate in a sector that is not easily understood, I would say, for the broader population. How would you explain what Talos does and how it fits into the overall digital assets ecosystem?
That's a great question, actually. A lot of people find themselves trading in a small capacity or large capacity. What Talos provides is trading tools that allow, again, like the same level of trading, but for institutions. And so a quick example of that, we obviously focus on crypto, although the team behind Talos would build this a lot in traditional markets as well. We were one of the largest players there. Think about an individual that wants to buy a stock or wants to buy, let's say, Bitcoin, right? You and I can go on an exchange like a Coinbase, log in, buy Bitcoin, deposit some dollars and buy Bitcoin. Institutions try to do the same, but the scale is very, very different and the stakes are very different. So the tools that they need to do that have to be institutional tools. This is what we specialize in. We specialize in connecting institutions and allowing institutions through our platform to trade, to invest, to manage their portfolios, to clear, to settle, to accomplish all the operations that institutions do when they interact with this professional level of trading, which could mean things like connecting into multiple liquidity destinations. So they can't trade only on one exchange. They have to trade on as many as possible to make sure that they provide their customers with the best prices and the best opportunities. Also for resiliency and reliability perspective. They might have a use of algorithmic execution, which basically is something that sits in the middle, breaks the orders apart because they're not trading one Bitcoin. They might trade $1 billion in Bitcoin, right? That has all kinds of implications. We build a technology that allows these institutions to interact with the market, in a safe and a secure, in a more, institutional environment. So that's kind of like what we do.
Excellent. And I think folks are generally familiar with names like Coinbase. Are there others out there that facilitate institutional transactions other than Talos?
So generally there's definitely others, without a doubt, right? And there's a difference between, a Coinbase and a Talos. We actually work very closely with Coinbase. And Coinbase is an exchange, right? Coinbase is where people meet to actually trade. Somebody is going to be selling, somebody is going to be buying, right? Talos is the infrastructure for institutions. It's a technology platform that connects to all the underlying facilities to Coinbase and the like, right? So we have about 50 different exchanges or OTC desks or dealers, all the providers that actually provide liquidity to institutions. We connect to them and aggregate that kind of liquidity. So our clients actually have access to the majority of the liquidity, so the majority of the trading activity that exists globally. And that's kind of like what we do. We're a layer that's slightly set apart. In fact, if we're specifically talking about Coinbase, Coinbase is actually one of our investors. We work very, very closely with the underlying liquidity providers, exchanges, OTCs, dealers, and so on and so forth.
Got it. Now, the elephant in the room, right, is that there's been some critical media around the space because of maybe a couple bad actors. How do you kind of manage that? Is it an issue having negative press out there about people in the space or about companies in the space?
Yeah, I mean, look, we obviously focus on the institutional domain, and without a doubt, institutions, just like individuals, right, are sensitive to what's actually happening in the world. Institutions do view things from a lens of, let's look at the actual data, what's happening underlying, right? The media could portray things in a certain way, and there's some things that are definitely right, and there's no question that there have been bad players in crypto, just like in many other industries. What we've seen over the past year and a half is we've seen quite a few of those bad actors leave the domain, and the domain become a lot more institutionalized, a lot more mature. And institutions know this. They're working with regulators, they're working with other firms. They obviously work with players like us to understand what is the institutional way to actually interact with it. So there's fundamental questions here, whether, in any new emerging domain, there will be people that try to take advantage of that growth, try to take advantage of the people that are coming in with a little bit less knowledge into the domain. That always happens with innovation, right? But the question is the underlying thesis correct? Is it there, right? Is there such thing as digital assets? Is there such thing as crypto as an asset class? And unequivocally, the answer to that has been yes. And the institutions have been following that globally, not just in the United States. And so bearing that in mind, there's absolutely quite a lot of movement forward, and the bad actors are leaving more and more. And some of them, have regulatory conversations, and some of them have been leaving because the businesses don't work anymore. But we're generally seeing just a better ecosystem evolve as a result in the past couple of years.
And if we were to take a look at the volume of trading that's running through your company or your technology, is it concentrated in certain digital assets?
Absolutely. So I would say globally, because we have quite a few different entities, we have quite a few clients globally, right? Globally, we trade a very large collection of assets, or rather our clients trade a large collection of assets. We are, really the technology in between. So we see the kind of instruments that go through, and you can probably say that there's around 1,500 separate instruments that are traded. If I had to characterize the actual activity, I would say the vast majority, especially for the largest institutions, is kind of like localized in maybe 10 different instruments. That's the vast majority of the activity, but there's a huge tail. And the reason is because when institutions come into the space and they trade, they have a different goal in mind, right? There are some that want to get exposure in some strategies, maybe quantitative strategies that want to get exposure to these very large cap instruments like Bitcoin, like Ethereum, right? And they want to trade that. But there will be other institutions that are coming in with a completely separate investment thesis. And they might have a quantitative analysis that basically says like, oh, this other coin that's right now not traded much is going to be trading a lot more, right? So they need to get exposure. Our job is to provide services to all those institutions. So we facilitate trading across the board. Whatever needs clients might have, our job is to meet them. So that's why, we see a very long of those kind of instruments traded, but definitely the majority is concentrated in the main ones.
Now, back to the macro picture, can you give us a sense for the size of the overall digital assets market and how you foresee it growing?
Yeah, the market cap has been fluctuating quite aggressively, right? The market cap is effectively all the outstanding value in dollars of all the outstanding tokens. There is over $1 trillion, probably about slightly more or around half of what it was at its peak in the spring of 2022 or the winter of 2021. The size of the market is still considered relatively small with respect to traditional assets. And that's why many of us believe that there's quite a lot of potential there for growth. So for instance, to give you just a quick tidbit, it's unclear because there's a lot of bilateral trading going on in crypto. It's unclear exactly what the liquidity and what the volume are on a daily basis. But we estimate it to be around, somewhere between 50 and $100 billion on a daily basis, right? To contrast that with FX is generally around $6.6 trillion a day, right? So if you think about it, we're talking about orders of magnitude less than what a truly developed asset class is trading right now in dollar terms. Quite a lot of growth, and so if you truly believe that in the viability of the asset class, you can see that we're participating at like a 1% degree. Like this is really still very, very early, and that's a lot of institutions consider it that way. So our view is that there's a lot of potential for it to grow, and we're hoping to provide our clients with the capabilities of growing with the asset class.
One of our, say, an audience member who is an entrepreneur in a traditional industry is probably listening to this thinking like, oh, this Anton has a very technologically advanced background. Tell us about kind of how you got started. Obviously, you're from MIT, which is probably the best place to be from when you're going into tech. But yeah, tell us a little bit about your background.
MIT is a phenomenal university. There's no question. I do think that it's down to the individuals and what they take out of it. MIT will definitely provide you with a framework, just like many other schools. We across Talos, we have very, very talented people. The people that are a lot more talented than I am. My co-founder and our CTO, Ethan Feldman, who we've been doing this forever with, comes from Cornell, another terrific school. But we have folks from everywhere and able to deliver. My specific background, I did computer science at MIT with focus on cryptography for my final year there. And then I went to Microsoft. I worked as a technical product manager there for about a year, and then immediately left to work as an engineer on Wall Street at a company called Broadway Technology. That's actually where I met Ethan. That was my first brush with finance. I never thought I'm going to find myself in finance. So it was kind of like, it was I really like the people. I really like the team. And that kind of like, that continues happening throughout my professional career. I much more gravitate towards the team than something very, very specific. And so I met Ethan there. Broadway, we were very early at Broadway Technology. We were employees, I think 15, 14 there. Broadway grew to become one of the largest provider of trading technology to the sell side sector, meaning banks primarily and service providers across the world. From there, I went to AQR, which is one of the top quantitative asset managers in the world, one of the top hedge funds in the world. And I ran the trading technology division there. And it was during my time at AQR. So that's kind of like, my upbringing is somewhere between very deep engineering and technology, and then kind of like morphing into financial markets very early in my career. Since 2011, 2012, I kept looking at what's happening in crypto. Towards my second year already at AQR, I think I was kind of sold on the vision, because you started to see something that is being truly adopted in decentralized fashion across the world, which is Bitcoin, right? And it's a fascinating thing to see, because the minute you see this kind of mass of people that is engaged with something, people from all over with all kinds of backgrounds, but really able to organize themselves and run this decentralized system, that's when you're starting to feel like, oh, okay, look, that there's definitely something here. And the evolution of especially the trading of crypto and Bitcoin specifically back then reminded me a lot of the evolution of electronic trading in capital markets, specifically around FX in the equities world, which, we participated in quite a lot. And so during my time at AQR is when I reached out to Ethan. By then, Ethan was the chief architect of Broadway Technology. So we were working for two different firms. And I reached out to Ethan. I'm like, listen, I think there's something serious here. It looks like another asset class. And in capital markets, nobody really thinks that there's ever going to be another asset class. It's not a thing that happens every day. So it was quite an interesting exercise to go through and figure out, is this real? Is this not real? Does it have legs? And we basically ultimately reached the conclusion that if we do believe that this is an evolution of another asset class, there is no such thing as another asset class evolving without institutions participating in that evolution. And we know really well how to build platforms for institutions. So we decided to, come together to build Talos and to be able to provide this, to start building towards a future where institutions are engaged with digital assets. And fast forward, today we're more than 5 years old in Talos, and the thesis has largely proven itself. And we're seeing more and more adoption every single month.
Did you show signs of entrepreneurship either in your childhood or in early career, or was it really just this idea of a new asset class that compelled you to come together with Ethan and form a company?
It's a good question. I think I always wanted to build something, and as an engineer, you have this mentality of putting things together. I've been a software engineer since I'm 10. Well, I wouldn't call it software engineer. I've been writing code since I'm 10, but I've been building things with my hands forever, and I've always been attracted to that. When I was applying to MIT, actually, part of my application, I wrote about something that I really want to build and wanted to start a company around it. And so I think in part it was always there. And my former boss at Broadway Technology, Tyler Moeller, reminds me that when I interviewed, and he was already kind of saying look, we kind of want you to join. Apparently, I don't remember this, but he's saying that it's true. It's on the board, I said I'm going to be at Broadway for this many years, and then I'm going to learn everything that you've done here, and I'm going to start my own company. I don't know if it's a great interview strategy, honestly, but apparently that's what I did for him on the board. And he still decided to hire me and give me an opportunity. And I learned a lot at Broadway. So I think the bug was always there. And I definitely talked about it for a while. But, it's not an easy decision to take to start a company. It's not one that I took lightly. And, I've quite a lot of years of experience before I decided to actually start a company.
I'm really curious about the interplay between the university someone decides to attend and the influence that university can have on their career path going forward. Do you think MIT increasingly is becoming more adept at producing entrepreneurs similar to the way Stanford is?
I think so. And I think that actually when I was in college, so I joined MIT right after my military service in Israel. So I was at MIT between 2003 and 2007. During that time, MIT was going through a little bit of a change where I can literally quote this. There was a professor that came out and said, I am tired of MIT people working for Harvard people. We all of a sudden had a couple of these classes that focused on how to think about presentations, how to talk to investors, even if you were talking. And years before that, there wasn't that much of an emphasis at MIT on that. And I think MIT was going through its transformation. They were we actually should encourage students to start and not be afraid, to not be just the building the technology, but actually thinking about building a company and not being afraid to do that and having the right tools to do that. So, I think I kind of witnessed the beginning of that at MIT, and MIT is a lot more supportive of those kind of initiatives today, without a doubt. So yes, I think it's very, very conscious on MIT's side to go and promote that, just like some of the colleges on the West Coast have been doing for quite some time.
What's the hardest thing that you've encountered as an entrepreneur that perhaps you didn't anticipate?
It's a hard question. I generally think that I've been very, very lucky with the level of support that I've received. And in part, it's again, like it's a little bit by design. I have a phenomenal co-founder. We don't agree on everything, but we do tend to complete each other to some extent in terms of our capabilities. And we have a phenomenal team at Talos, right? And it's been so hard to find the right people and to attract the right people and to build the right team here. I think some of the hardest things that happened during that entire, like if we focus on the Talos career, is thinking about how to operate a company in a down market. Actually, I can be very, very specific. The thing that I hate the most is that there are times where you're doing everything almost perfect. The operations of the company is great. The product has a product market fit. Everything is happening. You're signing contracts, but because of the industry you're in and because of the volatility, you still have correlation to how the industry is doing, and the industry will take you on the ride. And crypto is a very volatile industry. So, not for the faint of heart. And so the thing that I think that's been sometimes difficult for me is that you all of a sudden feel like as much as you want to be the master of your domain, you can't fully control what's happening. And a lot of times it's the outcomes are really dictated by some of the market. So some of the lessons are to try and figure out, how do you move away from that kind of like strong correlation? Do you do other things? Do you diversify away? And that's a very challenging question to ask, because a lot of times the answer is, do you stay laser focused on this and believe that no matter what happens, you're going to make it? Or do you de-risk to some extent? Those kind of questions, I think, are pretty complex. We battle with them all the time. We've been very, very fortunate to navigate the market downturn well. We've been very capitalized. We have a great product. We have grown during this time, but not without its challenge and its difficulties. That's definitely, I think, that notion of you all of a sudden don't have as much control as you'd like to believe you have, I think is a difficult thing to come to terms with.
Looking back at that time, the down market, do you feel like if you had a different perspective on it, you would have handled it differently? Or do you look back and say like, oh, we actually handled that quite well?
I would say we handled it okay. I do think that different perspectives would help. I think that, focusing on some of the more revenue specific things. So you tend to take quite a lot of risks when you're in an up market. And I think there's a portion of those risks that, knowing what I know now, we shouldn't have taken. And, it's one of the lessons that you kind of relearn again and again and again. You have to be laser focused on your go-to-market. You have to think like, is this getting me something? Is this moving our company forward? Does it have actual traction ahead of me? That kind of thinking, like constantly, you just have to pause and to think like, hey, I'm about to make this choice. Am I making it because of the right reasons, or because I think it's a new shiny thing that we'd like to build and we think that this might be good? Do I have the supporting data to say like, this is the right thing to build? So I think, there's at least a couple of avenues that I feel like we went into that we didn't need to go into, and could have been a little bit more conservative, and then could have been a little bit less conservative on some of the other things. So prioritizing, honestly, a lot of that is just being able to say no. It's like half of the time as being entrepreneur is just saying no to things, saying no to lack of focus, saying no to, all kinds of funding shenanigans that people try to rope you into, saying no to tons and tons of product directions that the minute you're a little bit successful, people try to throw you into, and being laser focused on actually delivery to market. So yeah, I think I should have been better. We've navigated it well. I think we navigated well because of the team that we have, the advisors, the board that we have, but we could have done better, and we will do better going forward.
Yeah, this idea of focus is one that is often talked about. I think it was very popularized with Steve Jobs' book about how when he came back to Apple, he had the entire organization focus on one product. How do you maintain focus? How do you ensure that you're saying no to the large majority of opportunities?
Not perfectly, but we try to do our best by relying on data. The machinery and the apparatus that we've built so far, the interaction that we have between our business development teams and our sales teams, and going back to account management teams, gives us a pretty good idea of what's actually going on in the market, where things are headed to in the market, and what true traction will we get in the market when we're going into specific directions. Steve Jobs is slightly different than what we do here. Steve Jobs can, that's the beauty, right? Like he could say, I decide, I'm a dictator, we will go in that direction, and that's where we go. We try to be, especially in our industry, we're not in retail, we don't have a single product here. We actually try to provide a one-stop shop for institutions to interact with digital assets, which basically means that you have infinite verticals that you can build, because an institutional life cycle is a long life cycle. So there's quite a lot of products that you can say, like, we can focus here, we can focus there, we can focus there. Where you're going is a question of what is your go-to-market strategy? What do you think the traction is going to be in the market? Are we going to be able to be competitive on pricing? Are we going to deliver a differentiated value to our customers? So it's a lot of grind. It's a tough process. It's trying to keep the deciding room small while getting as much information as you can, right? You can't decide these kind of things with 10 people. It has to be a lot smaller, but you're trying to get all the information you can to make the right decision. So that's how we go about this kind of stuff. So not perfect, but we're getting better and better at it.
Yeah, speaking to the fact that data is never 100% perfect, you will never have all the information. How often do you rely on gut, or do you pay attention to gut?
Yeah, whether you want it or not, it's there, right? Like you have an intuition, and why we've been able to grow Talos as well is because we do have an intuition about the market. We are seeing an evolution of a brand new asset class that has a lot of interesting and new things about it, but a lot of the lessons that we learned in capital markets apply here. How you manage the technology, what kind of tools you build for the same institutions that are coming from traditional markets into crypto. There's a lot of intuition, a lot of gut about that. But what you're trying to do, you're now trying to augment that, because you can have a very deceiving gut feeling. Somebody once told me it's like history, doesn't repeat itself, but it rhymes. And it's literally that. It's going to feel very familiar, but there will be differences, and there will be different turns. And so if you're just using your intuition and your gut of the past experience, it's not going to be enough. The idea is like how you augment these pieces. How do you take your intuition and your gut and you augment it with data? And if you don't have the intuition, you don't have the gut for it, like, you're probably not in the right space. I think that you need to be able to develop that kind of intuition. And that's what we demand from pretty much everybody on the manager level. They need to have intuition around like where we should be going, how we should be thinking about certain problems.
What's the best advice you've ever been given within the context of business?
So I think when we were first starting Talos, I think if the audience that's listening to this is going to take like a couple of things from this, that notion of focus is a very, very big thing, right? When we were starting Talos, we weren't sure whether we were going to take capital or we're going to do it ourselves. And we all of a sudden got an offer on the table from a VC fund that says like, hey, because we've been chatting with a couple of people, they said like, hey, we heard about this. We really like what you guys are doing. We like your experience. We think you're going to be successful. Here, take some money and go do this. And we spent weeks, because we never taken money before. We spent weeks trying to discuss, is this the right amount? What is going to be the dilution? Should we look for a higher valuation? Such a huge distraction, completely irrelevant, would have made a difference of 0.5%. Nothing here matters. 0.5% of a zero is zero every single time. So that notion of a focus, disconnecting from the things that don't matter, the things that you shouldn't hyper optimize, and focusing on the things that you actually should give all your attention to, the product, the technology, the team. I think that that's the best advice. And the advice came actually from somebody who's now an advisor at Talos. He came and he said like, dude, just take the money and build a company. And we're like, yeah, that's right. He's absolutely right. This is exactly what we should do. And we literally signed it the next day, and we never looked back.
We're coming up on the tail end of our conversation. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
Oh man, there's tons of people that have profound influence on me. I don't want to sound cliche, but like, I am very, very lucky to have the network of support that I have. And through my life, it starts obviously at the family level. I have very supportive parents who are very hardworking people, and the wider family. And my sister was being just a huge source of inspiration. She's a doctor at CHOP right now, and she's focused on autism and then done so much for the community around her. It's truly inspiring, right? But then I have also enjoyed quite a lot of frameworks like I was a professional athlete for a while, and the coaches there like helped me tremendously to progress and to become a more even keeled person. I think I was a little bit up and down, and today I'd like to think that I'm a lot more even. The military had quite a lot of impact. There's quite a few people in college, including some professors that were really, like they take you under their wing, and it's people that have been amazing researchers and tremendously super smart folks, and will always give you of their time. So I'm trying to be that at some point too, and I would like to think that I will be that, to help others to do what like that others helped me. So there's been quite a few of those people along the path. And then for the past 5 years, the most support that I've received is, outside of like my wife, who suffers through this like entrepreneurial thing as much as I do, at least, is my co-founder. Ethan Feldman has been like, tremendous, and always a source of inspiration to me. It's like we have an awesome relationship.
Excellent. What sport, by the way?
I was a professional shooter. It's an Olympic shooting. The event is I shot for 50 meters, small caliber rifle.
Amazing. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah, I can say about a few, so generally as a company, we've been involved again with autism research for some time. And we support a charity that's called Wall Street Rides Far, which is happening on a yearly basis. It's a bicycle ride, and quite a lot of people from Wall Street participate in that. And that's generating almost every year, I think we've beaten the record of how much money that the charity was able to donate to autism research. For me personally, I've been supporting quite a few different causes. Unfortunately, for the past 2 years, the state of the world has been like really challenging. So I was actually born in Ukraine. And then when the Ukraine war started, I started supporting some of the causes associated with that. And then I grew up in Israel. And now with everything that's going on in Israel, I support some of the causes there. So a lot of a lot of my personal support has been actually targeting the recent turmoil in the world. But yeah, Wall Street Rides Far. Outside of that, there's of course other causes. Wall Street Rides Far has been a really good one.
Excellent. Well, Anton, I want to thank you again for taking the time to chat with us today. I know our audience will find this very insightful.
Thank you very much. Thank you so much for the opportunity and everything that you do.